Good afternoon, good morning, good evening, everyone. It is 10 after 2 on this 8th day of April 2021. Taking a look at the British pound here. Going to go through the weekly and daily charts to see what we've got going on. First off, I want to take a real quick look at the oscillators. Well, actually, we'll look at the price action first. So this is a heck of a lot of selling wicks. I mean, there's a lot of sell pressure. Look at the week of the 22nd of February, massive sell pressure. And then the current week, so we had a bearish engulfing candle on the 22nd, which actually did not see a lot of follow through selling. In fact, yes, last week we saw some buying come up, so we have some buying tails here. But now look at this week. You know, unless something changes between today and the end of the trading day on Friday, this is a bearish engulfing candle that could trigger some further downside pressure. But look at where the close is at. And look at where the weekly Kijun Sen is at. And these are some levels that we want to pay attention to. I'm just going to mark that on the chart. I really don't need to because we're going to see it on the daily chart represented by another level. But just look at where that's at for now because that is an important zone to pay attention to. The oscillators. So it's in a bull market. On the weekly chart, we're clearly in a bull market. Now, in a bull market with the RSI, the overbought and oversold levels change. So we got all the way to a high of 70.68, which isn't even overbought in the RSI. 80 and 90 is. But regardless, in a bull market, the oversold conditions changed from, we don't use level 30, we use 45 and 55. So the first oversold level, the first support structure on the RSI, we're getting pretty close to it because right now we're at 57, so we're right at that level where we would possibly see a bounce. Then look at the Composite Index. This is a trademarked indicator from Connie Brown. Something that she wrote in her book, a technical analysis for the trading professional, is that I think it was in there. It was in the 30-second Jewel. I don't remember her most recent book. But anyways, with the Composite Index, if you see it moving out of proportion to what price action has done, that means that you are on the wrong side of the market, meaning that if you are short up here, it doesn't necessarily mean you're wrong in the short term, but you may be wrong very soon. And so when I look at the Composite Index, I see that, there was a prior low here where we're currently at. So this low here in the Composite Index was found on September 20th of 2020. But then we really don't see that being a very strong historical support level. The next support level we see in the Composite Index is really down here at minus 3.6-ish or so. We can see a lot of these troughs are here. So what I see happening here is we should see the Composite Index, given the momentum and what's going on with the RSI. On the daily chart, actually we don't see that level on the daily chart. On the weekly chart, it'll more than likely come down to 135.45. So another roughly 200 pips even, 190 pips from where the current close is at. That's where we should probably see price fall down to before finding support on the weekly chart. On the daily chart, we've got some really nice setups here for further downside pressure. I mean, this is in what's called open space, meaning the lagging span is meaning that there's not a lot of resistance below. But I would, pay attention to the weekly chart because if prices dip down, look for that level to act as a support zone. In fact, Forex.com doesn't have data there, but there's a high volume node in that zone as well. So definitely look for that level to be tested here probably next week. Over the next 2 weeks, I should say. 190 pip move, so look out for that on the pound. On the daily chart, watch for the break for price action to drop below the cloud. If we get a close below the cloud, which tomorrow would be any close that is below 137.36. That'll more than likely trigger that drop. That will more than likely trigger that drop. So look out for that. This anomalous data here, like Owanda's daily looks different than Forex.com's daily for the Ichimoku. If you ever want to know which one is probably the more accurate, I'd use the IDC data. You can find that on TradingView. And so Forex.com's is more accurately represented. So on Forex.com, or if you use the IDC data feed, we can see that we are currently below the cloud. And that on the daily chart, we've clearly tried to trade back up into the cloud, but that's been rejected. The daily is showing a kind of a tweezer bottom there, but watch what happens after the close today. It'll be interesting to see what happens over the rest of the trading day here, and then certainly on Friday to see what happens with the pound, because there's a lot of support structure that we currently see. Price action, historical support structure here. But on the daily chart, the composite index dropping below both of the averages in the composite index, that is a bearish sign. And then if the percent B drops below the 0.2, the RSI is still above 40, there's a clear signal of some downside movement and some really, really fast selling pressure here. I mean, this looks just like a bear flag. And so the pressure south will more than likely continue. Just look out for that. I'd be careful of being bullish, and definitely look for that 135 zone. I mean, yeah, we'll just leave it there. But anyways, we'll watch out for this and see how it works going into next week. From all the shared exchange rates UK TV, thank you for watching. I look forward to speaking with you in our future videos.